This is learning objective 3, expenditures during the useful life. So we already own the asset. We've got the initial cost of it recorded, which means that has been capitalized as an asset. And with your own car and with any planned assets, you know that there's ongoing expenses that happen after you've bought it. You have to change the oil, you have maintenance, you need new tires, you sometimes have to have an engine rebuilt. There's all different things that happen. With a building, you have your routine maintenance costs that have to happen, and then you may need an electrical upgrade. There's the basic decision that has to be made is, with these additional expenditures, do we capitalize them to the cost of the asset, or do we just expense them during the current period? If we capitalize them, they will be added on to that asset, and they'll will recompute the depreciation expense that will be taken. So they would come on the books as an asset. If they are expensed, we would call that a revenue expenditure. They just get expensed in the current period on the income statement. So how do we make that distinction? Generally, we're going to capitalize something if it increases the useful life. Okay, so it would increase the useful life of the asset. So with a truck, that might be your engine rebuild. You would expense things with a truck, like your routine, oil changes, and just regular maintenance. If something says regular maintenance, chances are we will be expensing that. Okay, so it could increase the useful life. It could increase the quantity of the output. If you have a machine, maybe you've got a rebuild to it that increases the quantity of output. Okay, it could also be a change that you made that increases the quality. In other words, maybe it does a better job of what it does. It could also reduce the cost of it. It could, what would we call it, increase the efficiency that something operates at, okay, of whatever your machine is. So it could increase the productivity, which would be the quantity. It could increase the quality. In general, it's had some material sort of increase in the future economic benefit as a result of this expenditure, which means it meets the definition of an asset, and we can add it on to the cost of the asset. So those in general, somehow they increase the future economic benefit associated with it. So they would just get added on. Expenses, like the regular, of painting of a building to keep, you would paint your building regularly to keep it from deteriorating, regular maintenance on machinery and equipment, sort of repairs, small repairs, things like that, would all get expensed. And what these do in general is they maintain the current operating level of whatever asset it is. It maintains the current level of output, or of productivity, I guess is the best word. Okay? Okay. So that's your basic difference between when you capitalize an additional expenditure, or whether you expense it. So if you capitalize it, say you rebuilt the truck engine, you would do a journal entry that said truck, and that capitalizes it to the truck and to cash, and maybe you had a $10,000 engine rebuild, okay? The amount of money is not as important as it meets the definition of a future economic benefit, when you do consider materiality. It could cost you $10,000 to repaint your building, and that would still be maintenance expense, because it just keeps the building maintained at its current level, and so that would be an expense on your income statement, even though it was the same amount of money. Okay, so I'll do, the next video I do is on how these little journal entries can really cause a lot of problems, and so I'll end this one right here.